Hello friends, in this video we will be covering all these topics which are digital payments, digital payment methods, benefits of digital payments, building digital payment methods, building a digital payment ecosystem, 5 reasons why you should go cashless and opt for digital transactions, future of digital payments, why digital payment increase in India, potential of India, hyper digital growth in India, what government can gain by increasing digital payments, and last, challenges and future of digital payments.
So we are going to cover all these topics in this video. First, let's go to the digital payments. Digital payment. A digital payment occurs when goods or services are purchased through the use of various electronic mediums. For example, there is no use of cash or checks in this type of payment method. Digital payment methods are often easy to make, more convenient, and provide customers the flexibility to make payments from anywhere and at any time. Example, these are good alternative to traditional methods of payments and speeden up transaction cycles. Post demonetization, people slowly started embracing digital payments, and even small time merchants and shop owners started accepting payments through the digital mode. So what is digital payment methods? Let's check out. Banking cards. These cards can be used at POS point of sale machines, ATMs, micro ATMs, shops, wallets, online transactions, and e-commerce websites. International cards can be used across globe for multiple currencies. Users can set up transaction limit based on card. USSD. The innovative payment service *99# works on unstructured supplementary service data USSD channel. Key services offered under *99# service include interbank account to account fund transfer, balance inquiry, mini statement, besides host of other services. *99# service is currently offered by 51 leading banks. Aadhaar enabled payment services. AEPS is a bank-led model which allows online interoperable finance transactions at POS point of sale micro ATMs through the business correspondent BC Bank Mitra of any bank using the Aadhaar authentication. Aadhaar card number should be linked with bank account. Service offered are balance inquiry, cash withdrawal, cash deposit, Aadhaar to Aadhaar fund transfer, payment transactions. Unified Payment Interface. Unified Payments Interface UPI is a system that powers multiple banks' accounts into a single mobile application of any participating bank, merging several banking features. And now, how to activate? Download the app for UPI app by your bank. Do registration online on the app. Create a virtual ID and PIN. No transaction cost for most banks. Limit 1 lakh transaction. Mobile wallets. A mobile wallet is a way to carry cash in a digital format. Most banks have their e-wallets, and some private companies, example Paytm, Freecharge, SBI Buddy. Other methods are micro ATMs, POS machines, mobile banking, internet banking, bank prepaid cards. Of digital payments.
Digital payments have revolutionized the way that people everywhere pay and accept money for goods and services. Consumers and merchants no longer have to worry about the inconvenience and security risks involved with carrying around large amounts of cash in order to pay for the things they need. But the benefits of digital payments go well beyond just convenience and security. It turns out that digital payments also expand the potential customer base for merchants, reduce cash and check handling costs, provide access to financial services to many previously unbanked populations, and bring many shadow economy transactions into the formal economy, increasing tax revenues for government. All of these factors combine to reduce overall friction for the economy, leading to increased spending and consumption. This increased spending in turn justifies greater production, an increase in jobs, higher wages, and overall economic growth. Let's take a look at some of the parts that are essential to build a digital payments network. It must be available 24/7 by forever. There's no room for downtime in a payments network. The world of commerce doesn't have time to wait for a slow connection. The network must move at the speed of business. From small merchants to mega stores, local businesses to international commerce, the network must be available to everyone, everywhere. Everyone who uses the network must trust it. They trust that their money will be there when they need it. In order to gain this trust, a strong brand and flawless track record is required. In order to be effective, the network must be able to rapidly scale up to keep up with growing market demands and changing technologies. When it comes to looking after people's money, security can never be compromised. Unparalleled security is a crucial component of a payments network. Advanced security tools, such as data-driven risk management, are essential to ensure that the network is safe without slowing the flow of commerce. A state-of-the-art authorization system is required to give users access to their money while keeping the fraudsters at bay. Strong networks must support constant innovation. Open architecture and robust application programming interfaces allow developers to build the technology of tomorrow. It must support mobile solutions to ensure that the network is within reach for everyone. Consumers demand faster and easier experiences when shopping every day. Digital wallets increase sales and reduce abandonment at checkout. In order to maximize economic growth, a successful payments network must be available across borders to expand access and grow commerce. But perhaps the most important part of the network is the people who use it every day. Without the people, the network would not exist. It takes a lot to build a payments network. An effective network enables commerce, expands financial access, and helps grow economies by opening up new opportunities for businesses and consumers around the globe.
Now, what is a cashless economy? In a cashless economy, all transactions are carried out using different types of payment methods. And this does not involve the physical use of money for the purpose of various goods and services. Digital payment is the way of payment which is made through digital modes. In digital payments, payer and the payee, a person to whom money is paid or is it to be paid, both use digital modes to send and receive money. It is also called electronic payment. No hard cash is involved in the digital payments. All the transactions in the digital payment are completed online. It is an instant and convenient way to make payments. If you talk about cash payments, you have to first withdraw cash from your account, then use it cash to pay at shops. Shopkeeper goes to the bank to deposit the cash which he got from you. This process is a time consuming for you and also for the shopkeeper. But in digital payments, the money transfer from your account to shopkeeper's account immediately. This process is automatic and neither you or nor the shopkeeper is required to visit the bank. Digital payments save you from long queues of ATMs and banks.
The goal in the transition from cash to digital payments is building a strong digital payments ecosystem. That means putting in place the technology, the partnerships, and the rules needed for digital payments to operate effectively. When the system works, more people will use it. When enough people use it, a tipping point is reached where it becomes harder to stay outside the digital payments system. Let's look at who plays a part. Governments set digital payments regulations and enforce them. They can also lead by example by making and receiving payments like salaries, pensions, and taxes electronically. Financial institutions issue accounts that enable electronic transfers. Payment companies authorize and settle transactions between payers and payees. Telecommunication companies transmit transactions between devices. They provide electronic channels to access financial services, and businesses and individuals make and accept electronic payments for the things they buy and sell. Building a strong digital payments ecosystem means linking these people and organizations in a way that shares the benefits of digital payments efficiently. To do this, government, business, development organizations, and individuals need to work together from the start.
What government can gain by increasing digital payments?
In every part of the world, Businesses and individuals engage in legal income-generating activities outside of government oversight. This is popularly known as the informal economy. In fact, 23% of the global economy is conducted off the books, generally facilitated through cash payments. That's $10.7 trillion in unreported income and revenues each year. Put differently, the informal economy is more than twice as big as Japan's GDP. The informal economy can have harmful impacts on people, businesses, and governments, as it may lead to unfavorable working conditions, unfair competitive advantages, and less tax revenue to invest in local programs. Around the world, governments strive to formalize the informal economy. Some policies are more successful than others. More recently, policymakers have shifted their efforts from strict enforcement and penalties to encouraging more digital payments. It's true, shifting from cash to digital payments can shrink the informal economy. Increasing digital payments by 10% each year for 5 consecutive years could lift global GDP by an estimated $1.5 trillion by 2021, providing people with greater job security, fair business practices, and additional tax revenues to invest in infrastructure. To see how economies can recapture unreported income by increasing digital payments,
You guys understood all these topics, and if you have any query, you can just comment down below, and don't forget to subscribe our channel. Thank you.